Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the Morning Call Express. We've had some really great action since November 16th, which was that key reversal day. A little bit digestion on Friday, Dow down about 180 points, following the fact that we're not going to get a deal. I don't really think that was that bad, considering the media hype that's brought into the fiscal cliff.
Well, I think on Friday, so the future's down huge. Thursday night, everyone started clamoring about it, and we were down, I think, almost 200 to start, and we only closed down 100. So to me, that was pretty constructive. You know, if we were to gap and go and we would have fallen apart, I do think that could have been a bit of a technical problem going into this week, because then again, you saw, on the shortened day, we were down like 6-7 handles. It wasn't a rush to buy, but we were still holding above some key moving averages. So at this point, we're up 2-3 handles today. I think we saw in the news that the president's coming home to try and put together some type of Band-Aid deal, starting tomorrow, so we don't just go over the cliff. But at this point, I think the market's going to be quiet, but there'll be, I guess, some small individual action.
So going into today, we have 4 trading days left. Again, the futures are up about 2-3 handles on the news Obama's coming back. What are you recommending traders do? Is it worth taking any small positions, picking here or there, or just locking your gains for the year?
Well, I think at this point, if you're in town, you have to be in front of your desk. You just don't want to do too much. If you look at the chart of the spiders right here, you will see, here's the past 2 days. This was your gap down. We had an inside day on, what was that, Monday? And this is your support. I think intermediate guys are going to be watching this. We're above the 50. I think as long as, just say the spiders hold above 140, 190, 142, I do think that, we'll continue to take this in stride. You do see a short-term little gap here, that was created on this gap down. So I think here's your micro range. Trading micro ranges this week, not macro, unless you're positioning for 2013. So resistance is 143.10. Here's your support. We'll see, I guess, if we get some kind of Band-Aid deal, I think we could probably jump up and fill this gap, but I'm not expecting any type of blockbuster moves. And if we close below this support, your next big area comes down right around 140.80.
Moving along to the sector spotlight, in the long call version, we're going to check the temperature of the sectors. We'll take a look at names like the Q, the home builders, the financials, including the ag sector as well. But let's take a look at the financials for the short call version, because they really had a good 2012, and we think that's a theme going into 2013 as well. Yeah,
they've been the place to be all year, and more recently we've had a really nice breakout. They've shown relative strength. If you look here at the XLF, you will see we had a nice breakout above this recent range, which a lot of other indices were not able to do. Came in a little bit. We're holding above the 8. I see major support around 16.13. I do see a lot of flag type patterns. You look at Bank of America. This was your macro buy. Here is your cash flow buy. Now all of a sudden it's flagging again, showing commitment here. Nice tight range above this 1152. It can go again. You also see something like Goldman Sachs, upper nice tight range. You had a big breakout of 120. Okay, now it's holding higher, even in the midst of what happened in the past 2 trading sessions. It looks good. Above this level, above 129, you can get some energy there. So overall, the banks are hanging in there, and they look like they're going to be in vogue coming into 2013.
Speaking of another strong sector for 2013 in the trenches, we're going to take a look at the ag names, which was a big theme for us in 2012, and we're seeing that thesis play out in December. We also think that in 2013, you're going to see nice support from this group in the market, because we have a lot of cash on the balance sheets with these names, and farmers really need to pick up yields because there's so much crop demand out there. We're looking at a global population going from 7 billion to 9 billion over the next 20 to 30 years, and this is definitely going to be a place to be. So we'll look at a name like MOO, which is the ETF for the sector, AGU, CF, Monsanto, Mosaic. But before we wrap up the Morning Call Express, Scott, we really have to talk about Apple.
Well, this is still on everyone's forefront. People don't know if we're going to hold this lower support, or can Apple finally find some love. So I think you have to treat it on a micro day-to-day basis. I hate to say that. You look at the chart here, it's gotten battered and bruised all the way from that 700 high all the way down to where it is. So I'm a little long Apple. I got involved the past few sessions. Here is one pivot to trade against. Here's your 505. But this will be interesting. Can Apple finally break this little minor downtrend? Okay, so if Apple were to start getting above 530, I do think you could see some pressure off it, and then maybe get some move. Sounds like such a small move, but back to, this 550 area. But if Apple doesn't get going, and remains in this pressure zone, it starts breaking below 505 or 501, you could see some capitulation or some downside action, where we've talked about, levels of support that don't come in until like 480-ish, and then all the way down to 440. So at this particular point, it's going to be very interesting to see what they do with Apple the next few sessions, as well as the first few weeks in 2013.
Okay, we still got a lot to look at, even though we're going into the end of the year. Have a great day, everyone. Catch Scott at the end of the day as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.